This is my first video here, so I want to show you like how to enter a trade smoothly without any complication or anything. What you're seeing here is a daily chart. This is my high time frame chart here. So from daily chart to 4 hours to 1 hour to 15 to 5 then to 3 until I see an entry actually. So this is Thursday after FOMC. So and I do trade in the New York, and this is already New York time. That's 7 a.m. in the morning. So the market tested this run here. I was expecting it actually. So I expect the market to react to this value gap I'm showing here. So market tested it and started going up. So I'm thinking maybe market just took out a buy side liquidity around this place. So buy side liquidity. Yeah. So market took out the buy side liquidity on the daily time frame. What do you expect after a liquidity being swept? A retracement or a reversal or a retracement or anything, or like you need to expect a reaction. So let's go to 4 hours charts. In a 4 hours chart, you have a fair value gap here. Market moved to the fair value gap and started reacting again. So this is a fair value gap here. Tested the daily fair value gap. This is a 4 hours chart. Fair value gap here. So let's go to 1 hour chart to see it more clearly. I've highlighted the chart already. So let me do it like this. This is a bearish order block also. So in this bearish order block, in cooperation with a this is a bearish order block in cooperation with the fair value gap in the 4 hours chart. So you see, this is what I'm talking about. This fair value gap. Market already enter the place with the bearish order block. Then let's now go to a 1 hour chart. In a 1 hour chart, you see a reaction after the fair value gap and the bearish order block. Market started to move as if it's gonna go lower. So let's go to a 15-minute chart to see something clearly. Okay, I was trying to buy. I bought some here in the morning actually, but this afternoon I want to sell. So we have let's call this one a buy side liquidity. Been swept. Buy side liquidity. So with this guy now, the buy side liquidity has already been taken out, and we have a market structure break around this place. So we have a market structure break around this place, which is market structure break. So after a market structure break, what do you expect? We'll look for a fair value gap or a bearish order block or mitigation block or anything that will give us an entry. We can't just enter after the confirmation. Then we've seen the confirmation that market is trying to go down to retest a particular fair value gap or something, but we want to follow the directions of the market. We don't want to go against the market. So here now, buy side liquidity again. So we have a market structure break around this place. Then we go to a 15-minute chart, 5-minute chart to look for a fair value gap. I don't think there's any fair value gap around this place currently, but we'll have to wait to see something clearly. Let's go to a 3-minute chart. Okay, on this 3-minute chart, we have a bearish order block. A bearish order block. Yep, it's right here. And we have a bearish order block. It's right here. Okay. This is a bearish order block. And after a market structure break, we have a bearish order block. So let's see what will happen next. You have to wait. You can't just enter a trade without any direction. You have to wait for the confirmation. That's what will give you an edge. Without waiting or anything, you're going to lose a lot of money. So I'm still waiting. If I miss the trade, I don't care, bro. I don't care. As long as my strategy, my entry has not yet been confirmed. So right, this is a bearish order block. We have a small fair value gap here. So on a 3-minute chart. So then we're going to look for something to enter the trade here. Then place our stop loss around here now. That's what we're going to do. So let's wait for the market let's wait for the market to give us some things to enter with. Still looking for the short entry around this place. So at least if it should drop, then we target the opposing stuff here. That's 2. So we have something here. Yep. Okay. If it reaches the main threshold of this fair value gap I placed there, I'm going to enter a short trade. So I might not be showing you my live account, but I'm just showing you how you can enter a trade without being scared of anything. So that's how we roll, man. So okay, I think it has entered almost. You can now, maybe if you want to sell, you can now sell now. It's not actually it's not actually valid. If you want to sell now, you can sell. This is a very short block. So if you enter a sell candle now, there's nothing bad in selling here. So just sell, place your sell, then you're good to go, man. And expect the market to respect your shit. So we are selling now. So I'm on the sell mode now. So you can sell around this place. So that's how you enter. I'll show you the final entry after the market move in my direction. I'll show you the final entry. I'll show you everything. Okay. So that's the target. This is a 20. You see, this is a 1:2 risk to reward ratio, right? It's not even 1. I'm risking 6 pips to capture 20 pips. That's the goal. So let's see what happens. So guys, this is the outcome of this setup. So it's very simple. Notice how many times the market touches our entry point. The first time, the second time again. So this is the craziest past whereby most traders were like afraid of, like, is it going to retrace or is it going to reverse on them or something. But the main thing here is your bias. If you are sure that, okay, nothing is 100% in market, but you have to be sure, like, okay, this is the direction I'm choosing, like this is what market says, this direction is going to go, no matter how many times the market retrace to touch your entry point again. Just don't shift your stop loss anyhow. Allow the market to run. Just a risk what you can lose, so you won't be like, why did I shift my stop loss and all those things. So it's very simple if you know what you are doing, right? So this is a nice delivery here. So we have 20 pips achieved easily. So, and there was a news that moved the market aggressively around this place, but that's what I used to say to myself every time, like, you don't have to be afraid of the news at all, because if you're on the right side of the market, the news will always move in your direction. So there's nothing to worry about, there's nothing to be scared about. This is just market doing its things. If you know what you're doing and you enter at the right time. So I think I've mistakenly removed the New York open. Yep. So NY, that's New York open. Then we wait a little bit, we saw a market structure break. Then after a market structure break, we look for bearish shadow block or fair value. If you go down maybe like to 2 minutes chart, you're going to see a simple fair value gap around this place. That's where I entered from. Paired with what? A fair value gap is valid only when there is a bearish shadow block that is like a bearish shadow block that can back it up. You can't just see this is a fair value gap and you are trying to enter from there anyhow. No, you have to see, like, if you want it to be confirmed, there should be a bearish shadow block backed by fair value gap. That's how it is done. So this is a nice delivery here. 20 pips, easy. That's all. Have a nice day.